Hey everyone, and welcome back to the Your Money Life podcast. We're in episode 284 of the podcast. Make sure wherever you're listening, you like, subscribe, five-star rate, and review this podcast and share it with your family and friends. I still don't have anything behind me yet, that is, because I will. I'll get something behind me. I want to, make this space a wonderful space. Of course, the home office, you love it. You gotta love it. But we'll get that done here shortly. But again, make sure you like, subscribe, five-star rating, review. Let's get into the episode. There's a lot of actual news to talk about. I want to talk about a lot of news today and also get into, of course, the market update and different things of that nature. But there's many different news stories that I found interesting, and hopefully you will too, that we'll touch on in regards to like current events and what's going on in the business world as of now. Let's jump right into the market update. Like the market update is, of course, where we first start. Um, you know, S&P stock futures are a little changed. And the Nasdaq notched a new record. And we're going to talk about even Nvidia, which is now the first company in the intraday trading, meaning trading before the session ended, hit $4 trillion market cap. A $4 trillion market cap, the only company to ever do that. That's actually quite incredible. So Nvidia hits $4 trillion market cap. The market itself, the market itself, let's look at here, is up 5% year to date. In the past month, we've gone up 4%. So we've had actually a really strong month for the market. Again, a lot of different factors attributing to that. There's one, of course, the calming down of the trade, um, trade and tariff spat, which is still actually, we have an article or an actual article that talks about how that's still going on with Brazil. We'll talk about that in a little bit. But some of those factors, inflation getting cooler, the job market holding up, we've seen the market rebound, and we're actually in really good terms here. If you remember March and April, we climbed out of that, and now we're sitting fairly well. Things to look for in the market in the next week or so. Let's actually dive into what CNBC is saying and some of the things we can look for in the next week. Again, the trade war back, 50% tariff on copper, announced 50% tariff on Brazil. Brazil's saying they're going to retaliate as well, so we'll read more into that. AI is still a huge factor in what's going on in the country, in the world, in the markets. So again, overall, you're seeing that the market's really enjoying 2025 so far. Right? This is a period of 5-6% increase so far, and we'll see how that carries through the end of the year. But that's what we're seeing so far this summer, is strong market push. Let's get into kind of the current events. Meta. So you probably seen the headlines. Meta is actually looking for AI talent. They're poaching top and key employees from other firms like Apple, for example, and they're paying top dollar. Meta actually paid top dollar to recruit. I will mess up his name if I try to say it, but Roman Pang from Apple. Meta offered this engineer a pay package totaling more than $200 million over several years. This is an anonymous source that reported this to Bloomberg. The compensation is in line with Meta's other recent offers to key execs. This is per Bloomberg. OpenAI recently went on a hiring spree of its own, snagging engineers from Meta, Tesla, and XAI. So people were just looking for AI engineers that are incredibly good and asking and doing it by paying top dollar to get them, paying top dollar. And these are people that are running the divisions in other companies, right? They're like the top people. And that's a highly competitive pay package. It's 200 billion over several years. That's that NBA max extension. That's that super max, right? And they're getting the super max to come aboard and to help provide to help build their AI infrastructure. They're telling me if they're investing this much in just getting the employees, they're pretty much telling you this is what matters going forward. This is what's important going forward. They're investing all their capital, resources, time, energy into this. And that goes for all these companies that are in this AI race. And so, yeah, it's a huge indicator for you. There's no bigger bellwether indicator for you than that. People are paying top dollar NBA Supermax for employees with these companies. So that says enough there. TikTok in more tech news, TikTok is developing a new US algorithm. So we know that TikTok has a deadline to be sold to a US buyer the administration has said that there is someone that's looking to purchase it, some rich gentlemen that are looking to purchase it. In the meantime, TikTok is developing a US specific version of their algorithm that's going to be separate from the global parent and China's ByteDance, which would help, right? Like some of the issues with privacy, some of the issues with why they want TikTok sold is because of that parent company ByteDance, which is a Chinese company. And if you separate the algorithms, if you can, right, um, this will be, one way to help dispel and help calm some nerves a little bit. But I still think it's going to have to be sold. Um, it's going to do a separate app for users internally called TikTok is developing a separate app for users internally called M2 with its own algorithm data infrastructure. Engineers aim to launch the standalone app by September 2025, replicating TikTok's global features while isolating US user data. The move responds to a 2024 US law requiring ByteDance to divest TikTok's US operations by January 19, 2025, or face a nationwide ban. The new version will train its recommendation algorithm solely on US user data, creating a completely independent content experience. The separation might limit access to international content for US users and reduce visibility for global creators targeting American audiences. So interesting. I think it's a good move. Remember, this was a privacy issue. This was a data issue, and this helps. It's a move in the right direction. I still think a deal to be sold has to be done, but it's a move in the right direction. So we'll kind of keep our eyes on that. I think that's really interesting. The U.S. hits Brazil with a 50% tariff rate. We just talked about that. The Trump administration unveiled new tariff letters to various countries Wednesday, including a 50% rate for Brazil that precipitated a 3.5% rise in coffee futures. Okay, because Brazil, of course, is a producer of coffee. Thursday, this happened. This happened, Thursday morning. Brazilian president said the country would respond with reciprocal tariffs. Okay, so they're like not laying down. I don't know much about Brazil, but they're not laying down. They're standing 10 toes. But levies targeting specific products and commodities, including 50% tariff on copper, steel, and aluminum, and 200% on pharmaceuticals. This is more of the administration of our administration announcing that this could cause more long range damage to consumers and businesses. CNBC reports Brazil's rate is among the highest of more than a dozen, topping 25% to begin on August. So the administration released these new letters of more tariffs, more action that was going to be taking place, and Brazil was one of the countries that was highlighted. Again, it must be the coffee um, importing. It must be something that the administration wanted to have a retaliation for, have fair trade for, I should say, or trade a new trade deal. And so they announced these letters. Many countries around there, Brazil again is highlighted. They also announced these tariffs on certain goods coming in, which was, of course, copper, steel, and aluminum, and pharmaceuticals. So people, again, long stated this is going to hurt consumers in the long run. We haven't seen those effects yet. They should be approaching. And we also haven't seen the tariffs really take effect fully because most people, or most of these countries, make a deal with the administration. And we'll see if that happens. Brazil, again, said that they're going to fight back and they're going to do reciprocal tariffs. What those are, I don't think they've been announced. But these latest letters are just another, tactic, and we'll see if they work. Again, so far the market and the investors have been on board with the way these trade tiffs have gone. And the market is responding in kind. We've seen it. We're looking at the chart right now. We're still heavily green and we're still up. How long that lasts? Is there any other factors that could affect that? We'll see. But that's what's been going on so far. So again, more trade stuff. We'll keep talking about that as it comes up. But let's move to airlines and passengers. Delta climbed on new profit targets. Delta issued profit targets on Thursday that suggest airline travel is stabilizing. People are flying again. Remember at the beginning of this year, there was a bunch of issues with airlines, flying, traveling. That was had me worried for a second. I'm someone that doesn't mind flying. It's easy. It's simple. But those issues we had earlier were worrisome. But now Delta's saying the airline had pulled profit goals 3 months ago. While assessing the impact of tariffs, Delta now expects an adjusted profit of 5.25 to 6.25 a share this year, which is down from January's internal forecast of $7.35. the shares rose 10%. So Delta's saying things are getting better. They have a better read on the impact of tariffs or lack thereof, and bookings have stabilized. They reinstated their 2025 profit forecasts while lower than the start of the year before Trump's on again, off again tariffs, and consumers grew hesitant. And consumers grew hesitant about booking trips. The CEO of Delta tells CNBC that premium travel demand and its lucrative Amex partnership continues to hold up. So things are holding up. Premium travel. He's just pretty much saying like the luxury market or the higher income folks are still traveling while maybe other people are not. And so that's what's going on. And Delta is a bellwether company. They could tell us a little bit insight to how consumers are acting, and they jumped 13% on this news. So it's an indicator that people are still having their city girls, city boys summer. Okay, okay. So we got that down. Let's look at this. Linda, I can't pronounce her last name. She's a CEO, former CEO of X. Linda, if someone could pronounce the last name for me. Yacarino. Her position at X was growing tenuous. Remember, she came in, I don't even remember when she came in, but it was highly publicized. She was going to be running X, try to bring back advertising. I think she was at a car manufacturer before. Um, let's read into this. The Wall Street Journal is citing that current and former employees of the social media company said that her tenure was getting very, very tenuous and stressful. Friction was there. There was clashes with Elon Musk that were very common. Musk wanted to see a faster turnaround of the company's advertising business. He brought her in. She was advertising at some other company. He brought her in to do the same thing, replicate it, bring in advertisers. But she wasn't able to do that. Is it because of him? Is it because of her? We don't know. But we do know that she's leaving. And now they're saying that X might shift to a new identity, a source of data for artificial intelligence training. But let's read more of this. X seems to have proven Mercer's idea in the book Lean Out the Truth about women in power in the workplace. This is a Sabine case, is a perspective from LinkedIn. Ici became the CEO of X in 2023 when ad revenues were collapsing, public trust was shaky, and Musk remained heavily involved in decisions. She was just the face. By 2025, when XAI absorbed X, her influence diminished effectively, and she became a public scapegoat. In Groks, which is the AI platform for X, truthful narratives, despite having no direct role in the development, her resignation soon followed. So I feel like he's like shifting the company from a advertising model to more of just like an AI truth source sort of thing. We don't know exactly. And she just didn't have any place, and her decisions and her thoughts and ideas weren't being soaked up just because that's not the direction they wanted to go. Because advertising isn't really coming back to X. They've lost a lot of that revenue, and I don't think it's coming back because they just can't get it back, to be honest. And so they're trying to shift the model. We'll see how that works. I feel bad for her definitely because again, she had a tough, tough job to begin with. Very tough to kind of pull in advertisers in a with a chairman that was not being very helpful in that regard as far as advertising. Um, it's a tough position for her to be in. We'll see where she goes next. I'm sure it will be wonderful. But again, it's a really tough 2 years for her in that regard. Trying to pull a company out of the trenches. A company that's well past the trenches is sky high is Nvidia. Nvidia became the first $4 trillion company. Nvidia standalone, the AI chip maker, became the first company to reach a market cap of $4 trillion on an intraday basis. And this was Wednesday, before closing out the trading session slightly below the threshold. This is the world's most valuable company. It surpassed Apple and Microsoft, which are the only members of the 3 trillion club. Nvidia has ridden the AI boom to the top of the markets, making the chips that power large language models like Chat GPT. This is a 32-year-old company, and it's seen its value surge 15-fold in just the past 5 years, 15x. That's crazy. Again, it just means that Nvidia is their chips are in well demand, right? They have 33 times forward PE evaluation. It's stretched, but it's lower than their peak of 43 times. Um, Companies are staying private for longer, and with a company like Nvidia, they're just powering the market forward, and they're powering themselves forward. And so that's something to note here. And again, it's just a company that it's the demand for these AI chips, these large language models is not going away. And so it's a company that's going to be doing well for a while. Last story that we want to get into is Goldman Sachs. They're taking steps to protect their secrets, their trade secrets by junior bankers. They want them to pledge loyalty every 3 months. The move comes in response to a rise in poaching by private equity firms that target new recruits as they begin their training. Known as an on-cycle recruitment, this practice frustrates investment firms. JP Morgan Chase has tried to stop it with threats of firing. Banks oppose recent grads accepting other offer jobs during training because the recruits are privy to confidential information. So pretty much analysts, these really smart kids that come into really good investment banks are poached by private equity firms. I've seen it. I've seen them when they were doing interviews during, as soon as they hit the desk, they start doing, it's a recruiting cycle. They start doing recruiting for private equity firms. But the banks are saying, hey, like it's more of a thing that they just don't want them to leave because they're losing good talent. Pretty much the trade secrets thing is like they don't really, I mean, they know stuff, but like it's more of like they're just losing good talent. The top analysts that come in are just already accepting offers to leave to private equity firms as soon as they hit the desk, right? So that's the big thing here. And they're trying to stop it. It's really hard to stop because a lot of these, it's a feeder program, right? A lot of these kids want to go into investment banking so they can go into private equity. And so they're asking them to Golden Sachs say, hey, we're not going to threaten to fire you. We're just going to say you confirm your loyalty to us on a regular basis, so we know that you are still with us and still doing the thing. The investment banks will ask new analysts to certify every 3 months that they haven't accepted jobs elsewhere. This is according to someone familiar with the matter. The move is meant to thwart poaching by private equity firms that have been signing up junior bankers near the start of their the job training, a practice known as on-cycle recruitment. So yeah, we'll see if that works. I mean, I think a lot of these kids just want to go to the next step for them, so it probably won't work. But we'll keep our eye on it. Folks, let's get into the questions of the week. It was a pretty, I had to find one. It wasn't easy to find. Wasn't easy to find. But the question of the day and of the week is what percent of Americans who have credit card debt won't be able to pay it off within a year? What percent of Americans who have credit card debt won't be able to pay it off within a year? I'm just gonna take a while, I guess to say 40%. Whoa, the answer is 70%. That's kind of crazy. 70% of credit card debt won't be able to pay off. Now, remember, we've talked about this snowball method, highest interest, biggest balance. Figure out the ones, the lowest balance. Figure out the ones that make sense for you. Attack it. Feel good. Get those things paid off. Because again, it's just crippling to people that have that. I didn't know that number would be so high at 70%, way higher than I anticipated. But again, use those methods to do it and attack it. I know it can be daunting for people, but you want to do it in a relatively quick time frame to give yourself that freedom. Give yourself freedom. Let's go to the next question. What percent of gig workers say it's their main job? Gig workers. So that's your Uber Eats, Uber drivers, any of those things. I would say 30%, 21% say it's their main job. 1 in 5 Americans. It's not bad. I mean, gig work is good work for people, right? 21%. Well, folks, that's the Your Money Your Life podcast this week. We've done this every week, so make sure you stay locked in. We will see you next week.